The global trade landscape is being reshaped before our very eyes. At the heart of this transformation lies a burgeoning trade war between the world's two largest economies, the United States and China. This economic conflict, characterized by tit-for-tat tariffs and escalating rhetoric, has sent shockwaves through global markets. Businesses and investors are left grappling with uncertainty. The U.S., under successive administrations, has grown increasingly wary of China's economic practices. These practices include intellectual property theft and forced technology transfer. The U.S. argues that these practices give Chinese companies an unfair advantage. The Trump administration ignited the trade war in 2018 by imposing tariffs on billions of dollars worth of Chinese goods. China responded with retaliatory tariffs on American goods. The Biden administration has maintained a tough stance on China, further fueling the trade war. The ongoing trade dispute has far-reaching implications, impacting businesses, consumers, and governments worldwide. In a move signaling a further escalation of trade tensions, Beijing issued a stern warning to the international community. The message was clear: do not collude with the United States in its efforts to restrict trade with China. China's Commerce Ministry accused the U.S. of economic bullying and attempting to isolate China on the world stage. Beijing insisted that such actions would only serve to fragment the global economy. The warning highlighted the growing rift between the world's two largest economies. Many countries rely on trade with both the United States and China for their economic prosperity. They are now caught in the crossfire, forced to choose between aligning themselves with one superpower over the other. The Biden administration has been actively engaging in a multi-pronged diplomatic offensive. The goal is to rally international support for its efforts to counter what it perceives as China's unfair trade practices. This pressure campaign has taken various forms, including direct negotiations with key allies and targeted sanctions against Chinese companies. One of the primary tools employed by the U.S. has been the imposition of tariffs on a wide range of Chinese imports. The aim is to make Chinese goods more expensive for American consumers and encourage businesses to shift their supply chains away from China. The U.S. has also sought to restrict China's access to critical technologies, particularly in areas like semiconductors and artificial intelligence. These efforts have involved imposing export controls and blacklisting certain Chinese companies. Critics argue that these actions risk harming the global economy and could lead to a technological decoupling between the U.S. and China. This could have unintended consequences for innovation and progress in both countries. China has not remained passive in the face of U.S. actions. Beijing has responded to Washington's pressure campaign with a series of retaliatory measures. These measures have included imposing tariffs on American goods and restricting market access for U.S. companies. China has also become more assertive in its efforts to promote its own economic interests on the global stage. Through initiatives like the Belt and Road Initiative, China has invested heavily in infrastructure projects around the world. China has also sought to forge closer trade relationships with key partners like the European Union and Russia. Chinese officials and state-run media outlets have accused the U.S. of hypocrisy, pointing to its history of protectionist policies. China has sought to position itself as a champion of free trade and multilateralism. However, some argue that China's retaliatory measures risk further escalating tensions with the U.S. and could harm China's own economy in the long run. The escalating trade war between the United States and China has placed many countries in a precarious position. They are caught between the world's two largest economies and forced to navigate a complex web of economic and geopolitical considerations. These countries, particularly those with strong trade ties to both superpowers, are walking a diplomatic tightrope. One of the most significant challenges facing these countries is the pressure to choose sides. The U.S. has been urging its allies to reduce their reliance on China and prioritize trade with the U.S. and other like-minded partners. However, other countries are reluctant to decouple from China, a major trading partner and source of investment. Many countries prefer to maintain a neutral stance, advocating for dialogue and cooperation to resolve trade disputes. This balancing act is becoming increasingly difficult as tensions between the U.S. and China continue to rise. The pressure to choose sides is likely to intensify, forcing more countries to make difficult decisions about their economic and political alignments. The consequences of these decisions will have a profound impact on the global order. As the US-China trade war intensifies, the world is witnessing a gradual realignment of economic and geopolitical allegiances. Countries are being forced to reassess their relationships with the two superpowers. This realignment is creating new fault lines in the international system and reshaping global trade patterns. The US has been successful in rallying some countries to its cause, primarily close allies like Japan, Australia, and Canada. These countries have taken steps to reduce their dependence on China and have strengthened economic ties with the US and each other. On the other hand, China has been actively cultivating relationships with countries that are wary of US intentions or see economic opportunities in aligning with Beijing. This group includes countries like Russia, Iran, and several nations in Southeast Asia, Africa, and Latin America. Many countries are still trying to maintain a balance in their relations with both the US and China. However, as the rivalry between the two superpowers intensifies, the pressure to choose sides will likely grow stronger, with significant implications for the global balance of power. The ongoing trade war between the United States and China has had a palpable impact on the global economy. Businesses, investors, and consumers around the world are grappling with the consequences of this economic conflict. The uncertainty generated by the trade war has dampened global growth prospects and disrupted supply chains. One of the most immediate effects of the trade war has been the imposition of tariffs on billions of dollars worth of goods traded between the US and China. These tariffs have increased costs for businesses and consumers on both sides, leading to higher prices for a wide range of products. The tariffs have also disrupted supply chains, forcing businesses to rethink their sourcing strategies. The trade war has contributed to a climate of uncertainty in the global economy, with businesses hesitant to make long-term investment decisions. This uncertainty has weighed on global growth prospects and led to a decline in business confidence and investment. The trade war has also fueled concerns about a potential global recession. The economic fallout from the trade war is likely to be felt for years to come. This underscores the need for a negotiated solution that addresses the underlying trade concerns between the US and China. The ongoing trade war between the United States and China has raised profound questions about the future of global trade. The rules-based trading system that has underpinned global economic growth for decades is under strain. The outcome of the US-China trade war will have far-reaching implications for the future of global trade. One possible scenario is that the trade war will lead to a fragmentation of the global trading system, with the US and China retreating into their own economic blocs. Another possibility is that the trade war will act as a catalyst for reform of the global trading system, with the US and China eventually reaching a new agreement. This agreement would address the underlying trade imbalances and create a more level playing field for businesses. The outcome of the US-China trade war is still uncertain, but the stakes are high for the global economy. The world is watching closely as the two superpowers navigate this complex and consequential economic conflict. The future of global trade hangs in the balance. The escalating trade war between the United States and China is more than just a dispute over tariffs and trade deficits. It is a symptom of a deeper geopolitical shift that is reshaping the global order. The rise of China, with its economic might and growing assertiveness, is challenging the long-standing dominance of the United States. The US, accustomed to being the sole superpower since the end of the Cold War, is now facing a formidable competitor in China. China's economic rise has been nothing short of remarkable, lifting millions out of poverty and transforming the country into a global economic powerhouse. China is now using its newfound wealth and influence to project its power abroad, evident in its ambitious Belt and Road Initiative and growing military capabilities. This shift in the global balance of power is creating both challenges and opportunities for the rest of the world. Countries are adjusting to the reality of a multipolar world, seeking to forge new partnerships and alliances. The US and China are both vying for influence in seeking to shape the emerging global order to their advantage. The world is entering a period of profound transformation, and the outcome will determine the future of the global order.